We try to open the attendee list.
Okay.
No.
So it's good to know something like this. Yeah. Okay, so everyone comes in. Very good, feel quite chill. Okay, and we can have fun. Okay.
Okay. Hello, good morning, guys. Hey, good afternoon, guys. So sorry about the. Okay. Good afternoon, guys. So sorry about the delay. I apologize for that. We are coming on to the live trading session. It's the 3rd October 2022. We are in a new month. This is the first day of the month, and it is the first week of the month too. So you should be careful if you are trading today on the markets. Okay, let us start with the PowerPoint. My name is Chen Yongting, and I will be your host for today. Okay, before we start, we always have a disclaimer. Okay, the disclaimer, I'll read it out first. Bear with me. Okay, the information, context, opinions which are expressed in the presentation and on the following slides are solely those of the presenter and not necessarily those of Vantage, and are solely used for educational purposes as they do not constitute investment advice and or consultation on how a client should trade. Vantage does not guarantee the accuracy or reliability of the information provided herein. Risk warning: trading margin forex and CFDs carries significant risk and is not suitable for all investors. You could lose substantially more than your initial investment when acquiring our derivative products. You have no entitlement, right, or obligation to the underlying financial assets. You are kindly advised to read the relevant documents on our legal documents page and seek independent advice to fully understand the risk before deciding to trade. Information is of general nature only and does not consider your financial objectives or personal circumstances. The responsibility for using and or relying on such opinions, material, context lies with the client, and Vantage accepts on responsibility for any loss, including without limitation to any loss of profit resulting directly or indirectly from reliance on such information. Attendees should note that sessions are audio recorded and may be published in various media, including print, audio, and video formats. Without further notice. Okay. Let's move on from the disclaimer. Give me a moment. Okay, introducing our analysts. First, we have Desmond Leong, who is our chief trader. He's also my boss. Next, we have Jia Ning. She's our investment analyst. Next, we have Jin Tao Tai. He's our prop trader and also our fundamental analyst. Next, it's me, Chen Yongting, and I'm the investment analyst. Our company are the finalists for the Best Forex Research 2019, 2020, and 2021. We are also the finalists for the Best Equity Research for 2020 and 2021. Okay, I'm done with the presentation. Let's move on to the live markets. Hey, give me a moment. Let me get my drink. I apologize for that. Okay, I am back. Let us look at the news for today. Okay, we are looking at the news. Give me a moment before I set things right. Okay, let's start. Let's start looking at the euro dollar first. None. We check the euro dollar, USD news. Okay, so for the entire day, we have the German bank holiday. So the markets are moving relatively slow, but we have quite a lot of news this coming afternoon. The time here, it's Singapore, 5 p.m. So all these news are local time, Singapore, 3:15, 3:45 p.m., 3:50 p.m., and 4 p.m. We have quite a lot of news with coming in the first news for the day, the Spanish manufacturing index coming in at worse than forecast, 49.0 against the previous 49.9. However, for the Italian manufacturing PMI, we have slightly better than previous with a 48.3 to 48.0. It's not as significant as the Spanish manufacturing PMI, which was much worse by 0.9. So we have the French final manufacturing PMI. There isn't much difference at a 0.1 actual to previous. For the German final manufacturing PMI, we have worse than previous, 47.8 to 48.3. That's a 0.5 difference. So looking at the final manufacturing PMI, we have 0.1 difference to the previous. So we are actually for the buyers for today, the sentiment seems to be on the bearish side for the euro dollar. We also have the Eurogroup meetings, which is lasting all day. And we have the final manufacturing PMI for USD, which is 9:45 p.m., 9:45 a.m. New York time. We also have the ISM manufacturing PMI, 10 p.m., quite a lot of news. I would avoid trading at that timing. Well, what I like to do is to avoid the known unknowns. So what do you mean by the known unknowns? Okay, for the knowns, as we can see on the Forex Factory, we are looking at all the news. We know it's coming up, but do you know the end result? Can you predict it? No, we cannot. No one can predict it unless you are some kind of insider. Yes, so it's best to avoid the news. To me, it's a form of gambling. Okay, first, let's move on to euro dollar and see what we can see. Okay. We are okay, let me clear this entire chart. Let me look at the monthly. Let's do a top-down analysis from the monthly. Okay, we can see that the euro dollar is on a very bearish trend. Price is coming down. Price is coming down all the way. It's negative. It's a very, very bad trend. Okay, so how do we draw a proper trend line? We must have 1 touch, 2 touch, 3 touch, minimum 3 touches. But to add confluence to this, we have 4 touches. This is on the monthly chart. So we are bearish on euro dollar. So let us take a look where price might go. Okay, price actually cleared this area before it bounce up. If you take a look, this is how I start my top-down analysis. So a next possible area that price could reach for would be this area, the next block. So I'll draw it out. The chart is clean, everything nicely done up. Then I'll start marking the monthly highs and monthly lows. So let us start. I got the template ready, monthly high and the monthly low. What we are looking for is the previous monthly high and the previous monthly low. because this area acts as a very strong form of supports and resistance. You will see price react very strongly around this area. So it's actually very, very good to mark out the monthly high and monthly low of the previous month. So currently we are marking out the previous high and previous low of September 2022. Let's move on to the weekly. Same thing. Get a nice clean chart. We adjust it. We are looking at the previous week's high, weekly high, and the previous week's weekly low. Okay, same thing. The weekly and monthly candles high and low act as a very, very strong points of support and resistance. So if you are taking profit, you are taking a stop loss or anything, just do take note of those areas into accounts when you are trading. Let's move on to the daily. Okay, I'll adjust it. Everything nicely done up. Okay, so the previous daily high was up here. Daily high, and we have the daily low. So since just now the monthly, we saw this, let's write it out. What was this area? What did it happen? What did I mention just now? It created some sort of monthly liquidity, monthly area. Took out some sell stops. Monthly liquidity. Let's type it out nicely so we know exactly the story behind why did the charts went down and bounce up. So we saw on the monthly it cleared that area, so there's a story. There's a story why actually price bounced up and reacted at that area. So we shall get a daily bias before we continue to add better confluence to why just now I was saying that the market for euro dollar, it's currently in the bear market. Price is below the Ichimoku cloud, which indicates that the market is bear. So this adds further confluence with the use of the Ichimoku cloud indicator. So let's get a daily bias before we start. So price seems to have rejected this area. Let me draw a Fibonacci. Let's show all fibs. See what is exactly up with the charts. Okay, price went down, cleared the monthly liquidity. It went up. It went damn near the 50%. Fibonacci retracement line. So it's possible that price can continue going up to clear the area, but judging if we use without any Fibonacci, it looks like this area acted as a form of resistance. Price tapped into that block, that daily block, before it rejected to the downside. So let us continue looking on into the charts. We'll leave the Fibonacci there. Let's go to the 4 hours. Take a look at the story. What is exactly going on with the charts? Okay. What we are looking at right now is, let's look at the order flow. Okay, 4 hours, price went down. Okay, let's look at the hourly. Okay, it's nicer on the 4 hours. Let me draw it out. Okay, what I like to see is nice order flow. Okay, so price went down and went back up, but went back down. What is this area? We have this area as known as the market imbalance. So we can draw it out. Why is it a market imbalance? Because previously this area, price did not tap into it. This area, market imbalance, because price did not come in previously. So let's go down to the 1 hour to refine it. What we want is proper refine. So let's draw a Fibonacci to add confluence to I will refine it. Okay, so we can see that price actually rejected the 50% area nicely before it shot up. So I do apologize. Okay, so we can drag our market imbalance down. Market imbalance here. You can see it has a pretty perfect imbalance clearance. This is on the hourly chart. So let me go down further to the 30 minutes to 30 minutes. We can reduce it smaller, but let's take a look at 15 minutes. This is the smallest time frame that I would personally go. Price came in and cleared the M15 imbalance area. Okay, same thing here. Price cleared this nice little area. There's the 1 hour imbalance. I'll set it. Okay. Let me set it to green. Not extended, normal green. Okay, look, it's very nice order flow. It clears and clears up, down. It clears very nicely the imbalance areas. Price came down to clear nicely. So what we are looking at right now, okay, looking at this, since our sentiments for the euro dollar, it's bearish for the day, I will be looking for shorts, possible shorts to the downside. But first, let me find liquidity areas. So we have this weekly low. This area acted as a pretty strong form of resistance. So let's say I want to take a short. Let's say that price is coming down. Let's say price closed nicely here. And I want to short all the way down. But I cannot do that because the weekly low, this area, acts as a form of resistance. So if I want to short, very safe, you're playing the markets very safely by marking out everything out weekly low. So let's say I short it here, my stop loss is here. My take profit, I'll just tap it on the weekly low, and that is it. I'll in and out of the market fast in case there's a very huge rejection. In case price comes down and shoots up. We never know. But because this the weekly low acts as a very strong area of support where people are looking to close their positions. So, or start buying. Okay. Let us take a look. Okay. Looking at this area, we want to see what is exactly going down. We can actually draw a Elliott wave. Let's draw it. Everybody has a different interpretation of the charts. Please do not just blindly follow me. Everybody sees the Elliott wave differently. Everybody draws trend line differently. It's very subjective. If it's not subjective, everyone would be making money easily. Everyone sees the same. We buy and sell at the same area. So yeah, I'm just sharing what I see on the chart with Elliott wave. So we have wave 1, wave 2, wave 3, wave 4, and wave 5. So right now I'm looking to shorts, but where am I looking to short? I'm looking to shorts A, B, and C. But there's a huge problem. I cannot short all the way down if I'm looking for shorts mainly because of this, the weekly low. So if I'm looking to short right now, I will be looking for price to maybe a stop loss here. We can actually expect some form of okay, let me repeat myself. Let's say price close nicely here. and I'm looking to short. What I'll be looking for is price to close nicely. I want the hourly charts or maybe the 30-minute charts to close nicely below this area. Before I look for retracement. What do I mean by retracement? I'm looking for price to come down nicely, close below, come back up, and come down. Okay, I'm not sure why it didn't register that. Okay. So we'll change it to bearish. So we can look for a possible retracement type of entry. But what I want to see is price to close nicely below it. Why price close here? To add another confluence to this area. We have quite a strong form of support at this area. Okay, let me draw it nicely. Okay, we have the support here. Somehow write it out. Support first, and it also coincides with the weekly low. But let us use Fibonacci to add more confluence all the way up. And as you can see, the support level, weekly low, are in line with the 50% and 61.8% golden Fibonacci retracement line. Okay, let's wait for price to hit below, but in the meantime, let's move on to another currency. Okay, let's move on to Aussie Dollar. Let's check what's going on with Aussie Dollar for today. Since we already know USD news, we don't have to check that. Aussie Dollar. Okay, for today, we also have the bank holiday for the Australian dollar. So market should be relatively slow, not much movements. So yeah, there's nothing much coming on the Aussie dollar today, but we can take a look at what is going on. Let's check top down. We are looking currently at the monthly chart. So what is going on? What is price doing? Price seems to be coming down and reaching for this low right here. But right now, we are currently on a monthly block. But let's draw our price all the way back. There seems to be some sort of support over here. You can see it's all the way back. The support, this area, and we can expect price to come down to this area. So we are bearish on the Aussie dollar. You can see since 2011 June, price has been descending all the way. It's been 10 years now. We are still on a bearish trend. Let's take a look. Same thing, how to draw a proper trend line. One touch we are looking for. One touch, two touch, and three touch, and four touch. So this adds to the confluence that it's a bearish market since the lines line up perfectly. And to add an even better confluence, price has closed below the Ichimoku cloud. You can see this area. Price has closed below, which further indicates that it is a bearish market. Okay, let's mark out the same thing. What can you guys tell me? What have I told you earlier? What do I have to do now? Anybody, just let me know what I have to do now. Just now I taught to you guys. Okay, we have an answer. Somebody just said monthly. Mark out monthly what? Monthly what? Monthly. You're right. Monthly high. Yes, and low also, yeah. Okay, so we got the monthly, okay, my bad. It is the monthly high and the monthly low. If you are watching, please type in chats, hello, so that I can know that you guys are watching. And if you guys have any kind of charts that you would like me to see, please send it my way. I will display your charts on screen and we can discuss my views on your charts. I can give my thoughts on your charts. I'm not saying whether I'm right or whether I'm wrong. It's just my insights on your charts. So please feel free to press the screenshot button, copy link to the chart image and paste it in chat and send it over to me. We can open it up, we can discuss it. Okay, since we have marked out the monthly high, monthly low, let's move on to the weekly. So we can slowly start to understand and grasp a better story of what is going on in this area here. So let's move on to the weekly. Okay. Price has continued a very, very strong bearish momentum all the way down. But where can we expect price to stop moving? So we can actually use the Fibonacci. Okay. Price has broke through the minus 27.2% Fibonacci expansion. For negative Fibonacci, we call it the Fibonacci expansion. So right now, we can actually expect price to continue downwards towards the minus 61.8% Fibonacci expansion. So in what case do we use, what do we call a positive Fibonacci that is above 100%, like this area? We call those the Fibonacci extension. Let me type it out. Fibonacci extension. This is for the positive sides, and for the negative sides, we call it Fibonacci expansion. Okay, let's move on. I give you guys some time to screenshot. Also, do let me know where you guys are tuning in from. For me, I'm from Singapore, so do let me know where you guys are tuning in from. I'm interested to see where my audience are from. Okay, I see some people are talking. They are from Singapore too. They are also from Malaysia. Okay, welcome, welcome. It's nice to have you guys here. Let's add some confluence to this area. I'll get it as minus 61.8. So we have the Fib, I have the templates. So we have cleared out all the other Fibonacci lines. So the chart looks extremely clean. So let's clear this area. We have a clean chart. So let's do another top-down analysis. Since we are on a weekly, we can minimize this monthly down to a smaller block. So we look, there is quite a block here. There's a block here which is in line with the negative 61.8% Fibonacci retracement. We always must have an area that price will reach out to. So price is reaching towards the area like a magnet, like this magnet too. Okay, let's add more confluence to these charts. Okay, look, if you pull it down from the top, we also have the negative 61.8 in this area. For the confluence, we can get a Fibonacci here. Let's take a look. It's minus 161.8. We are currently at the area. Okay, there isn't much. We can use a Fibonacci projection. Let's take a look. Okay. There isn't anything. Okay. So we already have confluence that on this area, price might reach this block right here. take a look, open your own charts, and let's compare. You can compare it and draw it out. We are learning live together. Hey, yes. Thank you very much for joining. I see that you are from Denmark. Appreciate you tuning in. What time is it in Denmark? For me, it's nearly my dinner time right now. Okay, so we are looking for price to continue going downwards towards this area, like some sort of magnet. Okay, let me go. I haven't marked out the weekly, the previous weekly high and the previous weekly low. Oh, it's 11:32 a.m. Nice, nice. You are having your lunch? Having your lunch. Okay, I'll mark out the weekly high and the weekly low. So let me reiterate myself. Why am I marking out all these areas? Okay, wait. Okay, we have actually double drawn. Okay, why am I marking out these areas? Because the monthly high, monthly low, weekly high, weekly low, these areas act as a strong form of support and resistance. So if you're looking to take profits, you might want to close partial profits there in case price rejects strongly along this area, monthly low or the weekly high. Weekly low is also, they are using the same area right here. So since monthly low and the weekly low are sharing the same area, we can expect if price breaks down this area, we can have a strong reaction upwards, or if the bearish momentum is strong enough, price can continue going downwards towards this area right here. So do be cautious. We have two lines that are using the same values. So this is a strong confluence that price might react strongly to those areas. So let's go to the daily. Same thing. I want to mark out the daily high and daily low. We are talking about the previous daily high, which is last Friday, and the daily low. Daily low. Okay. Let's take a look at what is going on. Why did we always want to have a story on why price went up and come down? So let's look to the left. So the price, it went down to 0.63627. Let us see on the right what is going on this area. Let's zoom in. Let's zoom in. Okay, we can see that price has taken out these liquidity areas. You can see they are of equal lows. This area, liquidity zones, liquidity. So price seems to have taken out this area. Let's draw it. We draw from the lowest. And let's take a look. Okay, it's nice. Price has came down and cleared the liquidity on the left side of the charts before it bounced up. So you can sort of tell this area has some sort of support, this area. So let's establish that let's write it down. Price cleared liquidity on the daily. So we know what is exactly going on. So we have. Okay, so right now, since price is moving in such a bearish momentum, we can expect price to continue head downwards, clear this previous weekly previous swing low, and the monthly low and the weekly low. So do take note of that area. If I was shorting, I would have took majority of my profits at this line. So let's say I was shorting from the top. If price reaches here, I would have closed maybe 80% or 90% of my trade by now. So it actually takes my mind off the charts. You have taken money is already in your pockets. You can leave the chart. If it goes break even, it's fine because you have already taken 90% of your unrealized profits. Taking partials is very important. It actually helps with your psychology a lot. Your mind is already off the chart. You can do whatever you want. You can leave your home. You can go and do your hobby, be it whatever it is, playing games, exercising. Because you already know you have taken partials and made some money. Let me clear out this area. Let's move on to the 4 hours and establish what is going on. Okay, on the 4 hours, we can see there's actually some sorts of market imbalance. Okay, what is a market imbalance? As I was mentioning earlier, market imbalance is this area where price previously did not come in to clear. So price went down, went back up into this area, which we call a market imbalance or an ICT, inner circle trader, fair value gap, this specific area. So let us draw out a box so we can see it clearly. Okay, look at this area. I'll change it to red, box red. And look, this market imbalance area is acting as some sort of resistance. So let's go to the hourly top-down analysis. Hourly, let's see what is exactly going on. Okay, on the hourly, price is below the Ichimoku cloud, which indicates that we are in a bearish market on the 1 hour. So if I was looking to sell, I would probably wait. Okay, we also see a 1 hour market imbalance right here. Price also went up to tap. So let's draw it a bit more clearly. Instead of using the 4 hours, this is the 4 hours. Let's move on to the 1 hour. We'll pull the market imbalance up to the 1 hour. Because what I like to see is, I want to know exactly what is going on into the market, where price has rejected. I want it to be very, very clear. So let's say in a situation that I'm looking for shorts. Most people would be saying, okay, let's take a short. Maybe they shorted here. Their stop loss might be all the way up. Their stop loss might be here. But their take profit here. Let's just give an example. Risk to reward 2.41. How can we get a better confirmation entry by using break of market structure? So let's mark out the high and lows of the 1 hour candles. So we use the brush tool. I will change the drawing to 4px. Is it thick enough? Okay, no. Not brush, I'll use the highlighter. Okay. So you can see this is the high. Okay, I should change the color. Okay, I'll change it to orange, maybe orange. Can you see it orange? Okay, it's not seen properly. What's going on? Okay, I'll put it at 100%. Easier to see. Orange. High, high, low, high, low, high. So for the next low, if the low breaks here, let's say the price went down here, is officially the market structure has been broken because we got a lower low. So we can set out this area as, we can actually draw an arrow. Let's say the market has broken here. We can set this as break of market structure, bottom. Break of market structure. Okay, let's make the arrow a bit bigger. Okay, break of market structure. If price actually went down and created a lower low. So what I like to see is price goes below this line, forms a lower low, comes up, retests, and that would be my sell entry before I head down. But bear in mind, if you are selling, also the daily low, it's a strong form of support, this area. So price might potentially tap and bounce off this area. So same thing, I will take partial profits to get my mind off the charts and just let the runners run to either break even or a further take profit down below. Okay, this might be a possible sell on the Aussie dollar, but let's see. What I want to see is price to close below this area before we can consider about anything, about any sales or anything. So it's better to trade on the 1 hour. The market structure is cleaner. You can see it clearly. You have more time to plan. If you're on the 1 hour, you can see all morning price only went up a bit all the way here. So you have actually more time. If you're actually doing a few currency pairs, you can actually take your time. You can slowly plan things out. Instead of on the 1 minute, 5 minutes, wow, when break of market structure, you faster want to sell, you faster whip out your calculator, you faster type, what is my risk? So for me, I risk 1%. So let's say 10 pips, I start to count, oh, what's my risk? What's my lot size? I faster enter. I faster enter and I do not see the bigger picture. So let's say price is already on a downtrend. But on the smaller time frame, I failed to see the 1 hour. I failed to see that it's a downtrend. I failed to see that. And then I try to long. It would have hit my stop loss. It's better to see the overall picture and follow the overall larger time frame bias. Try not to counter trend trade. So we do not try. Okay, overall, let's see. Price is already on the downtrend. We do not try to catch moves like this. We do not try to long and catch this big move. What we want is the market bias to be in our favor. So for Aussie dollar, I would only be taking shorts over longs. Now I'm out. What I'll be looking for is just shorts. Trade along with the market flow. Okay. Let's move on. Let's check back on euro dollar. Okay, euro dollar has broken through. Let's see where price might potentially head towards. What we have on the 15 minutes, price has broken down. It is very possible that we can right now, since price has broken through this area, what we are talking about, price has broken all these liquidity areas, this line right here. We can look for a retracement sell entry to the weekly low. Let's take a look. Let's take a look on the 15 minutes. Let's do 30 minutes first, top-down analysis. Let's find a market imbalance area. Okay, we have this area. Okay, price could possibly come back up here for a short entry. So we could possibly look, if the bearish momentum is so strong, we don't have an entry already. But let's say price continues to reverse back up. We can potentially look for a short entry up there. So what I'll be looking at is, I'll wait for the 30 minutes candle to close first before I start to consider any trades. If the 30 minutes candle close in a long wick, it close is just one line, but the candle close above. It's just a wick. If it's a wick close, WICK, I wouldn't take any trades because it just tells me the market went down to clear liquidity. It's very, very dangerous. So let's mark this out. 30 minutes market imbalance. Let's type it out. M30 market imbalance. Okay, let's insights right. M30 market imbalance. Okay, price is very, very strong. It's heading pretty strong down. It looks like we might not have an entry already since the bearish momentum is very, very strong. Let's look at the M15. Let's draw a line. Price has taken out liquidity. So what I like to call this is SSLQ. What is SSLQ? You may ask. Let me type it out. It's called sell side liquidity. Let's take it yellow. Sell side liquidity, SSLQ, has been taken. So we got some kind of story on what is going on. So we could potentially, since price tapped into the M30 market imbalance, there is, we top down, there is a M15. We are on a 15-minute chart. So look at this area. This area, we have a market imbalance right here. So let us draw it in. We will rename it to M15 market imbalance. So let's say I want to short it. Let's say I want to take a short. Where will my stop loss be? I cannot be here, right? Why? Because we have another market imbalance on the M50 chart. Hey, welcome. Thank you for joining me from France. Thank you very much. I am from Singapore. We are currently in Asia. It's 5:49 p.m. Asia time. Okay. I'm about to have my dinner soon after this session. So let's say, as I was saying, I wouldn't have my stop loss up here. Why? Because there's another M15 market imbalance right here. There's another one here. So what I want, we also have another one here. So what I want is have a safe, a very, very safe entry with my stop loss all the way up. Either here, if you want to play it safe, you can have it all the way up here. So you can have more time to control your trade. It will be a 49 pip stop loss, 46, 45.9, round up, 46 pip stop loss with take profit down here at your weekly low. So this might potentially be a 1 to 1.18 sell entry. Okay. This is an idea that I am currently looking at, but if price continues breaking through, it will be a no trade day for me. As I was mentioning earlier, on the euro dollar, what we have is the Elliott wave, wave 3, wave 4, wave 5. Next, we have the Elliott wave A, B, and C. So I'm actually expecting wave C to end somewhere around wave 4. The Elliott wave theory is wave C usually ends around 4 or below 4. So if we are not taking any risk, we want it to be above 4. We find an area. So we have this equal lows. Let's take a look on the 15-minute chart. Where is the liquidity? We have it here and here. Why is it the liquidity? They are of equal lows. So that is a potential take profit target. That's a potential take profit target. So, but there is a huge problem right now. So let's say I want to take profit here. At this sell side liquidity, what I want is this area. I want to take out this area. But then we have this weekly low. So what I would do is, let's say I'm already in a short, I apologize, in a short, I would have taken majority of my profits, maybe 90%, I would have closed here and let the runners run. So I do not care if the price bounce up or go to my break even, or if price goes up, slowly comes down, it's fine. Psychology first. Always remember to take partials. It's very important. You guys will understand it once. If you choose not to listen to the advice, and then you have what else? I apologize. If you have one day you have a trade that happens to hit break even after making a substantial profits, your psychology would be greatly affected. So it is not a good thing. So right now, I'm looking for price to potentially come back up to clear the M15 Market Imbalance. Okay, let's wait. Okay, just a reminder one more time. This is not a signal webinar. This is just a live trade analysis webinar. I'm just giving the market insights based on how I see it on a day-to-day. I always go down top-down analysis for monthly, weekly, daily. What I like to do is construct a story on why did the candle bounce off a specific area. So remember, always look to your left of your charts. Do not just stay on your charts at this current screen right here. Always remember to continue scroll all the way to the left just to find out what is exactly going on. Okay. If you guys have any more questions, feel free to let me know in chats. Also, feel free to press the screenshot button, copy link to the chart image, and send it right in to the chats so we can view your charts live on this webinar and we can discuss your charts. There's no wrong or right. It's fine. Do not feel shy. Do send your chart in. Okay, look like price is on a very, very strong momentum. Let's see if there's any news, what is affecting it. Okay, Eurozone yields rise on inflation, angst, yield pressure fades. Okay, there isn't much news, but might be the DXY. We can cross-reference this by looking at the US dollar, the DXY. Okay, just now I drew it earlier. This is not scripted. I already drew it earlier beforehand. I was looking for price to continue heading bullish or bearish. So since price is heading bullish, the euro dollar is dropping down. But right now, we have some sort of resistance on the US dollar, the DXY, because of this first resistance area. We are looking for the DXY to possibly have some sort of pullback before price continue heading upwards, and that can help with the confluence of the euro dollar sell. So if the DXY goes up, the euro dollar goes down. If the DXY goes down, the euro dollar goes up. So you can actually use the DXY to aid in the confluence of your trade. So remember to please cross-reference to the DXY before you enter a euro dollar trade, or Aussie trade, anything got to do with which has the word USD in it, any pairs USD, just check the DXY. Also do take notes on the news. If there are any, please stay clear of it unless you are very confident. Okay, if there are no other questions on this session, there are no other questions. You guys don't have any charts to send in. I would like to end my session here, and I would like to thank you very much for joining me today. My name is Chen Yongting, and I am the Trade analyst for Everest Fortune Group. This webinar is brought to you by Vantage Education. Hope you guys stay safe in the markets and have a good day. Goodbye, guys. Okay, thank you. Have a good day, Hans Abdias. I hope I pronounce your name right. Bye, bro.